turn now to the economy, where new numbers today bolster the view the Fed's done with rate hikes. Core PCE, the Fed's key inflation gauge, rose just 0.2 on the month and 3.5% year on year. That was about in line with expectations. The headline was up just 3%. Meantime, we got a surge in continuing jobless claims, pointing to some more cooling on the labor front. Chicago PMI was better, though. My next guest thinks both recession and inflation risks remain elevated. Joining me for more is Bryson. He's chief economist at Wells Fargo. Jay, welcome. And I hope I've summarized your views kind of correctly. Which one do you think is the bigger risk here for the moment?
Well, Kelly, I do believe that inflation is coming down, and I guess that's part of our view of why recession is still, is still likely out there. As the inflation rate comes down and the Fed remains on hold, which I think most of us feel that's going to happen for quite some time, the real interest rate, which is that nominal rate less inflation, is going to drift higher going forward. And that's what really matters to real economic growth at the end of the day. And so what you're going to get in the coming months is we'll call it passive tightening of monetary policy as that real interest rate drifts a little bit higher.
So that said, how much lower do you think the inflation rate's going to go? Because that passive tightening, I mean, it's a fact, but it may be, we're only talking, what, a quarter point here, a half point there. How big an impact do you think it'll have?
Well, so right now, if you look at, you just mentioned the year-over-year rate of the core PCE inflation, that's kind of what we look at. That's at 3.5% right now. We could see that by the early part of next year going down to 3% on a year-over-year basis. If you look at the last 3 months and you annualize the change, it's only at 2.4% right now. So that tells us that year-over-year rate is going to continue to come down. And so the question is, at what point does the Fed pivot and then start to ease rates? And I just don't think we're out of the woods yet in terms of the Fed starting to ease rates.
Right. I think it was John Williams who first raised the idea of them cutting rates in response to this so that they don't accidentally or passively tighten, as you're describing. But we haven't heard many of them talk about it since. Do you really think that's something they'd act on? I mean, what is your forecast at this point for the first cut?
So, Kelly, our first cut is, let's call it the June meeting of next year. The timing is a little bit uncertain at this point, but I think it's a little bit later rather than sooner. I mean, you're right. I don't think there's a consensus there to start to think about cutting rates at this point. But part of our view that the Fed starts to cut next year, and we do have an out-of-consensus view by how much they do cut, is predicated on the fact that you do get a real softening in economic activity, if not a downturn in the middle part of next year. Now, if you don't get that downturn, then perhaps the Fed doesn't cut nearly as much. But they definitely will need to keep an eye on that real Fed funds rate as we move forward and the passive tightening that implies for the economy. So
to me, you sound, Jay, like you're on the more cautious side about the economy, on the more dovish side of inflation. Is that right? Or do you think that there is a risk that inflation proves stickier than expected?
No, I think that's right, Kelly. I think I would characterize it the same way. I'm a little bit more cautious about real economic activity in the coming months. A little bit more optimistic than perhaps what the market is in terms of the inflation rate. If you look at the dynamics in inflation and some of the underlying components in inflation over the last few months, it's all, in our view, pretty good developments. It's just that the question is, how proactive is the Fed going to be? And it seems at this point they're still kind of dragging their heels. They're still saying the battle of inflation is not won quite yet. It's still way too early to ease.